Meanwhile, the fate of the Fed and the taper timeline are in question following the resignations of hawkish voting members Eric Rosengren and Robert Kaplan after questions about asset trading stirred up controversy and are now being investigated. Those issues and what Fed Chair Powell didn't say in his Senate testimony yesterday could reveal he knows his tenure as Fed Chair might be over, according to my next guest. Joining me now is David Zervos. He's the chief market strategist at Jefferies. David, it's good to have you here because the consensus had kind of settled in on the idea that he would be renominated, but you now think differently.
Well, to be clear, Kelly, I thought Jay's probabilities were actually pretty low. I was away from the market to begin with and have been for the better part of a year. I thought divisive politics in D.C. Really meant that the Dems did not want a Republican in such a powerful job going into the midterms, especially if they're unable to get this fiscal package through. The only thing that's left is monetary policy. So they need real control. Especially even, thinking further ahead to the 24 presidential election.
So from your point of view, and you're right, I do remember you writing about this, maybe a year ago. A lot of people more recently, though, thought that Powell, by being so dovish, by, kind of all of the dovish surprises he's given us in the last few months, that was part of this effort to kind of signal, I'm still your guy. Now maybe you're thinking it's not so much that there's anything wrong with what he's doing on the monetary policy side, but that it's an opportunity for people to replace him. And that maybe there are some legitimate questions that need to be asked about why there wasn't more oversight of what was going on with this trading.
Yeah, I think that's exactly right, Kelly. I think this creates a real opportunity for the progressives that we know we're going to try to take him out anyway. And, Elizabeth Warren yesterday, that was about as aggressive as I've ever seen a senator treat a Fed chair in any testimony in the 30 plus years I've been watching this. It was really an ugly exchange at the end. And I think, she has some ability to step it up because that things look more vulnerable. You have a trading scandal under your watch. You're the boss. You probably should have been a little bit more cognizant of what was going on. He still has some questions to answer in his own municipal bond portfolio issues on the municipal bond portfolio issues. So I think it's an opening, and I really do think that even without it, it would have been a tough decision in the end for the Biden administration, particularly if this fiscal stuff gets hung up, which it increasingly looks like it's going to do.
Sure, and that's another factor here as well. So you actually went back and said maybe the hawkish messaging we were starting to hear last week could have been an early way of him kind of paving the way for a post-Fed legacy. But I wonder if the practical takeaway for investors here is a more dovish Fed, and what does that mean for rates, for the yield curve? I'm curious how you would play this narrative out.
It's really complicated. Let me just say that, I was very puzzled, and I was on with Sarah and Wilf after the press conference on Wednesday, and I said to them, I'm like, I just listened to this thing. It was me and Paul McCauley, and I said, this sounded like a different Jay. I really didn't get it. Like, what's changed? But he didn't mention transitory. He didn't talk about long-term disinflationary pressures. He didn't talk about the 5 million missing jobs. Usually he's much more, for lack of a better word, dovish, and it was all gone. And the market sort of noticed and then kind of went on its merry way. But, we had a little bit of a dip and it came back and everybody was sort of, I think, a little perplexed, as I was. And as I was thinking about it into Friday and the weekend, I thought, well, what's different? Not the data. Employment data was weak during the post-Jackson Hole pre-meeting period, and the CPI came out weaker. What's different is this scandal. And I think this scandal kind of changes the internal, thinking of someone like Jay, whose odds are a little lower, and maybe he doesn't have to play by the game he's been playing by, which is to try to appease the administration a little bit to make sure he gets the job. So,
again,
sorry,
I would just say,
I'm sorry.
No, but this is all very speculative, totally. But I think that these are exactly the kinds of things that traders are discussing, talking about who might step up, whether it will mean more dovishness, and if that's all kind of feeding into the moves and rates that we've seen. Since this is changing day by day, Dave, and week by week, we'll check back in and see, how it progresses. But I appreciate you at least, laying out the landscape as you see it today. It's good to have you.